Welcome traders. This is how the upcoming non-farm payrolls in December can impact gold. We have on Friday, December 6th, two pieces of data coming out. One's called non-farm payroll, the other one called unemployment rate. So it's important to know that they're both coming out. When we talk about non-farm payrolls, they're both labor market data, but this one is just counting current payrolls, right, to keep it simple. So this is the amount of people working. And then when you look at the second one, this is the rate measured in percentage of the people who are not working. I don't want to see this data come out mixed. And I'll show you what that looks like on my little cheat sheet here. When we take a look at non-farm payrolls, if this data, and there's a little color code here, right? If it comes out higher than expected, this is the expectation here. But if it comes out higher than expected, I want to see unemployment rate come out lower than expected, right? So I want them to be inverse each other. Because when you think about this, if non-farm payrolls comes out above this 195 and above the high, but then unemployment rate also comes out higher, you now have one piece of data that's telling us, okay, you have a lot of people working, non-farm payrolls, and then you have unemployment rate increasing, which is a lot of people not working. This is typically how you get stuck in fake outs, consolidated markets, and just choppy trading environments. Now, to be fair, I would actually say unemployment rate can probably have a higher impact. So if there is mixed data, let's say, for example, unemployment rate comes out way above expected. But let's say non-farm payrolls also kind of comes out above expected. I would put much more weight on unemployment rate. Reason being is that the Federal Reserve has actually specifically come out and said that they don't want to cause unemployment rate to increase above 4%. They said 4.5 is kind of their max. That's really important because this data is what helps the markets determine interest rate decisions. So not to go too deep into that side of this, we'll just talk about expectations for this specific piece of data and how I would look to trade it, right? This is what the markets are expecting. Now, if you look here, you can see that there's a minimum and max. This is important because this number, this forecast number, it's just an average of this, right? If I was to click down on this number here, you'll see that there's actually voters. That's where this 195K comes from. There are funds, there are banks that are actually voting using their analysis, and that's where we get these numbers. The high, 270, and then you can see the low down here at 160. And then on the bottom, this is a scale telling how many voters. You can see the majority are actually sitting at 180. But when you take a look at the expectation, it says the expectation is 195. The reason this is important to understand is because if this, I'm telling you right now what I think what I think gold's going to do with lower NFP. But if NFP comes out at 190, technically that's lower than expected. But when you look here at this graph, you can see the majority of voters are actually expecting 180. This is important to understand because this is when you see data come out a little lower or a little higher and the markets still don't really react. And people got kind of confused, and it's like, it's because you don't understand that there's actually a minimum and a max, not just the forecast. So if you look on free resources like Forex Factory, that's all you're going to see is the forecast. So just want to break that down. That's why you can see, if you look at this little cheat sheet, I have the high and the low here, right? So my best case scenario, what I would like to see for gold, I would like to see a low print below, best would be below the low expectation, below 160. And like I said, it needs to be inverse for unemployment. I want to see high unemployment. If this happens, you see the little red squares that I have, that would be considered deflationary, right? That would technically be more reason for the markets to start pricing in rate cuts. The Federal Reserve hasn't had their next rate decision yet, but this would cause them to think that they're actually going to cut rates. If we take a look at this little chart here, also from my news terminal, you can see that the markets are currently, you can see here it says 65%. That's the probability that we're priced in for a 0.25% rate cut, right? You can see here it says Federal Reserve. And then we can see that we're 34% priced in for no change, which means a pause. So if we see labor market data coming out worse, there's a really good chance that that will actually increase the likelihood or the percentage of interest rate cuts for the next rate decision. Now, the reason that's important is because low NFP, high unemployment, meaning more rate cuts, is going to be, just like I put here, bullish for gold. So I'd be looking for gold to push up, all based on that, right? So technically, if you're just looking at NFP, it should be inverse gold, right? Lower NFP, I'm looking for gold buys. But you got to remember, pay attention to unemployment rate coming out, right? And then I'll break down the technicals in a minute, but we'll talk about the other possibility too. If this data comes out, NFP comes out higher than expected, and unemployment comes out lower than expected, I would technically be looking for the inverse, right? I'd be looking for gold to drop. But with that being said, I'd be very, very careful going against the bias on gold. I'm still bullish on gold. And even if we do get a short-term drop on gold and you manage to catch sells as it breaks support or as it starts to push lower, I'd be very careful holding that trade because I think there's a very strong chance of reversals. Reason being is that the Federal Reserve has already come out and said multiple times they don't care about the labor markets being strong, right? The Feds use interest rates to fight inflation. Inflation is not being caused right now by the labor markets. So there's a very low chance, if labor market data comes out stronger, there's a very low chance the markets are going to start taking this 34% probability for a pause. There's a very small chance the markets will start increasing the probabilities for that, right? If the markets did increase the probability, that's where you get your gold sells, right? But there's a very good chance, nothing's guaranteed in the markets, but there's a very good chance if NFP comes out higher, unemployment rate comes out lower, and gold does drop lower, I'm going to wait for it to hit support, and then I'm going to look for reversals to take buys right back up because I don't think it'll hold to the downside. Now, once again, if you get an impulsive sell, if it hits support, if it breaks, don't take buys and bearish price action, right? Wait to see signs of a reversal before actually getting in on what I just said. I'm not going to just randomly take buys on a bearish candle. I'm going to wait to see a double bottom, price changing, shifting market structure, something of the sort, right? So like I said, we'll break down technicals in a bit, but just understand you do not want to see mixed data. If both come out low or if both come out high, that's a no-go. The best case scenario, low NFP, high unemployment. The riskier scenario, high NFP, low unemployment. Ideally, I'd like to be taking gold buys, and I want data to give me a reason to take gold buys. And if you take a look at the chart here, now this is a gold futures chart. The technicals don't change if you're looking at XAU USD and you're trading it through Forex. I trade gold through futures. It doesn't change the analysis. It doesn't change price action. Your numbers might be a little different on your charts if I go to like an XAU USD chart, but they don't look different, right? This is XAU USD, and then you can see this is gold futures. Same thing. Now, when NFP actually comes out, this is going to be a little difficult because gold might not be sitting here anymore. We have a lot of other data coming out, JOLTS jobs data, initial jobless claims data, and stuff like that before NFP. And there's also chances of geopolitical tensions causing gold to move. So you do have to be careful on, the zones I'm pointing out. But generally speaking, if you're looking to trade this data, number one, you want to understand the direction based on the data. Number two, you just want to see price breaking above an area in order to take impulsive buys. I'm okay entering impulsively if the data's in my favor and gold's also moving in the favor that I want it to go, right? I'll enter on an open candle all day if NFP comes out lower, unemployment rate comes out higher, and if we see this, like if pressures come out here and I see this candle start to push up, I'll probably enter before it even breaks this area, assuming I get a quick entry like that, because I think there's a very high probability it's going with my bias. The market's going to start pricing the rate cuts. I'm comfortable doing that. I'd say the opposite is true for taking sells. I'm going to let it hit support, and then if it breaks is when I'll take the entry. But I'm not going to take anything sitting at support because I think there's a chance it'll consolidate and then reverse and continue back up. There isn't that much that's making gold bearish. The last time gold was bearish was only because, number one, this headline right here, this was from the Israel-Hamas peace talks treaty, and number two was the beginning of November when Trump was announced president. It's the only time, if you zoom out on gold, even on the higher time frame, that we've been taking sells on gold, right? Anything other than that, it's just been buys, consolidation, buys for the last 13 months. So this data comes out Friday, December 6th. I'll be posting an update after the data comes out, showing you maybe any trades that I took or any trades that I didn't take, depending on how the data came out. So I'll see you guys in the next video.